Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. Trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. Welcome back to the show, Rick. And for us, welcome to the new year.
And Happy New Year to you, Jim, and all of your listeners. I appreciate your inviting me on.
Rick, is gold going to continue an upward rise this year, or is it going to take a bit of a break?
Well, I like gold. It started the year last year with a great rally, what I call an impulsive rally, and we've been correcting ever since, but possibly breaking out here. But if it's a breakout, it's taking its sweet old time. I'm really just looking for corrections that give me opportunities to get long speculatively in gold. So I'm a buyer here. My bias is bullish, but gold can be expected to correct pretty regularly every time it gets heated to the point where people are thinking, oh, this is it. But I do have right now a target just above 1,700. Gold recently fulfilled a target that you and I think, talked about a while back at 1,605 and change. So it's come back away. I'm sorry, it was 1,609.20, I believe. But the pullback has kind of opened up another pathway to even higher, 1,700. So I wouldn't call that a done deal yet. Gold's currently at 1,544, and that leaves a lot of upside. But I'm really cautious in gold whenever I'm trying to buy it, because it does have a way of thwarting people who think it's easy money to just buy it and watch it go.
Gold bullion, gold certificates, gold miners, gold stocks. What do you pick out of that?
Well, we're looking mainly at two vehicles. One is gold futures, but there are a couple others that you can play if you're not a futures trader. One goes under the symbol GLD, which owns physical gold itself, and it's an ETF. And we also look at a couple of other ETFs. One goes under the symbol GTX, and it tracks the number of mining stocks. GDXJ tracks smaller, what do you call junior exploration stocks. So I've got a lot of subscribers that follow them, not just for places to get in and out to trade them, but because frequently they are telltales for moves in the underlying metal. So usually if you see the mining stocks holding up pretty well on days where gold bullion, the futures are getting pounded, it's a good sign. And sometimes these mining shares will lead gold itself. And lately they've been showing pretty good resilience. Today, with gold futures currently, the February COMEX contract off about $7. GDX, that mining company ETF, is up 18 cents. So it's hanging tough, and that's a good sign. But even there, I think I'm going to wait for GDX to fall a little bit more before I start buying again.
We'll have more with Rick Ackerman right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
Welcome back. We're speaking with Rick Ackerman. Rick, last year we saw the Boxing Day in Canada, as we call it, the day after Christmas, the big drop in the stocks. Not the same thing this year. Are we in a monstrous bubble that just won't burst? And you said, according to J.P. Morgan, this isn't even a bubble.
Yeah, J.P. Morgan put out an interesting little, reminder that when you look at what they evidently think were real bubbles, 1929 and the dot-com crash, that certain indicators that they used were way more extreme. So they say that in order for the current bubble to be an actual bubble relative to ones that have occurred in the past, we'd need to see the S&P 500, for one, up in the 3,700 neighborhood within the next quarter or two. Currently trading 3291, so that's a fairly significant move, but it's not not unattainable within even a month or two. So, but I would say they've left something very important out of their assessment, and that is that the concentration of investable funds in just a handful of stocks really is dangerous. And they may not see a bubble in the S&Ps, but I think it's certainly there in the tech stocks where all the money is going, and you've just really got a half a dozen stocks that are making all the gains, making all the fund managers look like geniuses, which they are not.
What are those fund managers doing that you say a blind chimp could do?
Well, they're tossing a whole lot of money into Apple, which if you put Aramco aside, Apple is the most valuable company in the world, and if you just kept putting money in Apple last year, or put it in to begin the year, you'd be up, I think it was 108% for the last 12 months. So why be some striver looking for 8 or 10% returns when you can satisfy all your requirements with just one decision, Apple? So that's where they all are. Facebook and Microsoft both also have inordinate gains, and on the order of, I think, respectively 50-some% and 80-some% over 12 months. So it becomes self-fulfilling over time. You think, geez, I made all my money here. Is there any reason to sell Apple? And there being no reason, at least in the minds of these the chimpanzees who manage portfolios, they just keep buying them.
Is there a danger when you pile everything into just one or two things?
Well, I have a chart out on my homepage right now of Apple, and when you look at the steep verticality of the rally, especially over the last few months, that question answers itself. It's an unsustainable rally. It's just so steep, and it's always fun. I can't resist the temptation to try to pick a top. In the case of Apple, I had a target out at 319 and change, and overnight it hit 318 and change. So odds, of course, are against picking a top. This bull market's been chugging along for more than 10 years, or close to 11 years now, and but it's fun to try, and usually we can make a few bucks in the reaction moves that frequently occur from these targets. So, but anyway, you just take a look at any chart in Apple that shows the last year or so, and you'll see a spike that you don't have to be a chartist to understand that it's absolutely unsustainable.
We'll have more with Rick Ackerman right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Ackerman, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, with all the problems in the Middle East now, are you surprised oil hasn't done better, and when it has gone up, hasn't sustained those numbers?
Well, you better be careful when you buy something on some story and the story kind of implodes. You know, here was Iran making all these threats in retaliation for the U.S. Taking out Soleimani, and from the get-go, from pretty early on, it was obvious that Iran wasn't doing much in the way of retaliating. But it was, as far as the crude oil bulls go, the story is even worse than that, because what this back and forth between U.S. and Iran, militarily speaking, demonstrated was that we're really in control. We could virtually destroy Iran's energy infrastructure or even its weapons producing capability without sending in a single soldier. So no one had ever really thought of that before, that Iran, for all the threats that it makes, is really vulnerable to some of the high-tech weaponry that the U.S. could bring against it. So they're going to be, let's say, more thoughtful before they start sinking tankers in the Hormuz Strait. And so I think oil is really, it's in a more relaxed mode than we've seen it in a while, and it's certainly not about to run away because the global energy-consuming economy is about to boom. We just don't have that. We've got a boom in companies that make applications that sit on phones, and that's not really energy-intensive.
China, of course, its economy took a hammering from all the U.S. tariffs. Is it going to recover now they have what they call a phase one agreement between the two nations?
It will. I think that China did well pushing their exports to countries other than the U.S. And, you know, there have been a couple stories lately, one in the Wall Street Journal the other day, that said the effect on the U.S. economy was, if not negligible, it was certainly a lot smaller than anyone had anticipated. The farmers certainly took a hit, but in the case of auto parts, and some other hard, durable goods, the loss was at least tolerable. So I don't think China would have suffered a whole lot worse, although it looks like their consumer economy took quite a whack. They're not quite as geared up in China to just buy stuff as we are here in the U.S. So a consumer-led recession is going to have more impact on China than here. And in the case of the U.S., I don't know what it would take to throttle consumer spending. It's really continued even some months ago when we were thinking, hey, maybe the U.S. was bordering on recession, but consumers kept on spending, and they continue to spend, and that's really, I guess, the strength of the U.S. economy.
Well, isn't it the goal of China to build up their consumer base to the point where they don't have to rely on exports so much?
That's true, but as I was just mentioning, it's a little more delicate than our consumer economy. We've got the consumer state of mind, which is to say, consumption is so deeply ingrained in Americans, and everybody's got plastic. It's all pay later. So our economy is geared for consumption in a way that China's is not. China's consumption, I think, takes it strengthens when when you have, I guess, a rising tide where everybody feels like the Chinese economy is on the upswing, but there's still a little bit of anxiety there about what the tariff wars have done to the consumer economy there. So it's not nearly as robust as what we have here.
And of course, yeah, the Chinese, they only started a consumer society a few years ago. The U.S. was based on consumerism from day one.
Yeah, we do pretty well with it, and not sure when day one was. But we're so used to buying everything on credit that the spending can continue well into a statistical recession. You don't know the recession has hit. At least consumers don't know until we're statistically well into it.
How many Americans are still going to be paying mortgages when they retire, and is that a trend?
For sure it is. I mean, it's an inescapable fact when you have a period where you get a lot of appreciation in homes. People are going to take some cash out. They're going to basically borrow on whatever equity they have on their phones. I think the trend will be a big one among baby boomers, because the baby boomers, by and large, have not socked away quite what they need to retire and live as long as people seem to be living these days. Before we get to some critical threshold there, I think we're going to see Social Security and Medicare collapse. There's really no way around that, because there's no way that the millennials and even the Gen Xers combined will be able to pay the healthcare bills of the baby boomers. It can't happen.
And of course, the U.S. does not seem to be keen on raising its younger population through immigration.
No, I mean, we certainly have, in the U.S., we've accommodated the demands of labor market at the lower end by just importing labor. But, and we don't have nearly the problems that Europe has had in using that same tactic. But, the population of immigrants, will continue to grow here to the point where what you would call the non-immigrant majority may be in a minority.
Is there any concern in the U.S. about its tourism continuing to fall, down nearly 4% last year? And we keep hearing horror stories of people crossing the border here being detained for hours and then being refused entry, and they were frequent visitors.
No, I don't think so. I was in San Francisco for one. That's one of the major destinations for tourism in the U.S. And even though you read stories about how if you walk around San Francisco, you have to step around the homeless, step over their bodies on the street, and step around their feces, but I didn't find that to be true at all. There are encampments in the Bay Area that are so large they're really scary, but for the most part you can enjoy. San Francisco is still a great city, and I think that a lot of the things that Americans like so much about America that make for great sightseeing will always attract tourists. It's just probably the main factor that will cause tourism to fluctuate will be the value of the dollar relative to other currencies.
You're really pleased with the internal, chutzpah and gutsiness of Elon Musk. Can you tell us about that?
I love that guy. Notwithstanding some people in my own chat room who are saying, "Oh, he's a criminal, and they're going to put him in jail, and he's lied so much to borrow as much as he has, and all those cars sitting on the lots aren't even sold. They're registered as having been sold or pre-sold or something, but they're really not." Well, I think that he's one of the great entrepreneurs. He's produced a product that is very, very fast and beautiful, and it took a lot of guts really to start an auto company. So he made his money the hard way, getting his hands dirty, so to speak. Whereas there's so many billionaires out there, all they've given the world is some application that sits on a phone that destroys businesses that may have conducted business in a different way. And of course, I'm referring there to Uber and Lyft. But for that matter, to Google and Facebook, which are just gigantic glorified advertising agencies. So as opposed to producing a lot of virtual garbage, Musk produced a real car. So I'm also glad to see that he's not gloating over the fact that the stock price has tripled since not too long ago. The stock's up at 542, and I can absolutely guarantee you that when Tesla shares were trading down around 177, this was back in as recently as June of 2019, that the same people who hated the stock at 177, they've had, let's say, a change of heart. You know, not much has changed really, other than the fact that so many people had bet against Tesla that it's in this most amazing short squeeze that I've ever seen. And as I said, I'm really happy for Musk, even if the rally at this point is just it's a fraud. It's so overdone. I do have a friend who does a lot of technical work with point and figure charts, and he says the stock could get to 1,000 on his charts. Currently trading 541, so there may be a lot more upside than bears or traders who have been short Tesla want to think about.
Well, China's mandated electric cars in the very near future because the air there is so thick you could eat it with a fork. Does that bode well for Tesla because his factory there has produced, well, at least its first car?
Well, everybody's moving into electric cars, not even hybrids. These are straight plug-ins, and the technology's getting better. Musk is really at the on the cutting edge there as far as developing power storage methods, and there was a time really within the last couple of years when people were thinking, well, geez, the Tesla only has so much range, and how's it going to work when we go to the gas station and have to wait for 2 hours for a charge? But of course, a lot of the advances in batteries have come from technology that allows you to charge them almost all the way in a relatively short time. So Tesla's right there. They put a lot of money into developing power storage, and it's going to pay off for them.
Well, I know people have range anxiety, but one of our frequent guests, Hilliard Macbeth, his family owns 2 Teslas because they liked it so much. He drove from Edmonton to Vancouver and back. He said the great thing is the onboard computer, tells you when long before you need to recharge, you should be recharging, and it points out exactly where all the recharging stations are. So he says there are a lot more than you really think. They're just very subtly aside. You don't need a big infrastructure like you do for a service station where you're dealing with flammables. Yeah, so the range is there, and the car tells you where to go. Perhaps the cheaper models don't.
Yeah, it's a pretty smart car. There's no question. And I think that Tesla has developed in a way that integrated a lot of the digital electronics more organically than we've seen for some of the other auto companies that have been around for years. You know, Ford and GM had to adapt to the fact that microprocessors more and more were going to determine how cars performed and what kind of maintenance they needed and this and that. But that was part of Tesla's plan. So it's a bit of a rude awakening for GM and Ford when they see that they've got to recall a car for the failure of some component that really has nothing to do with what we call the old-fashioned car. It's just some sort of onboard computer that was sold to them by a third party, and you can become really dependent on how well that computer performs if you're just motoring around.
Yeah, and it was pointed out to me, too, if you buy GM and Ford, and of course they come with all this computerized stuff, by the time you finish paying for the car, the computer equipment will be totally obsolete. Whereas Tesla, it seems, the car was designed around the computer, not the other way around.
Right, yeah, that's exactly it. And again, that will have benefits for Tesla moving forward. Some of the companies that are coming at it will be a little bit behind the curve there, I think. And one thing that surprises me, I live down in Florida, and there seem to be so many Tesla models. I didn't know. I mean, I knew that they were producing this series and that, and rolling out a sedan, but I see so many different body styles that I'm really surprised that they've ramped up production for so many segments of the market so quickly.
Rick, thank you so much for chatting with us.
It's always a pleasure, Jim. I thank you again for inviting me on.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks. His website, rickackerman.com. If you have any questions for Rick or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.